Hello everyone, my name is Lachlann. I write for Money Morning and I'm also an analyst on Exponential Stock Investor. Now today I'm going to look at a couple articles with regards to energy, and then I'll look at a number of charts which sort of paint the picture for us going forward. So here I've got an article from the Australian Financial Review. It's carrying some quotes from Turnbull about the gas-led recovery that is on the cards. Now, he's got some pretty savage quotes in here. I won't give you the full rundown, but he says gas has a role and would have a role for quite a long time, but it's going to be a diminishing one. And there's a pretty big quote here. There are people who are basically rent seekers who want to get the federal government to pay for infrastructure. And the theory is that it is how you'll make gas competitive. So regardless of what you think ideologically here, there is, I guess, a lot of ways you can look at this. For one, you can start to look at some oil and gas companies like, say, Santos Energy, which pushed off the March market lows quite strongly here. So this is the daily. And then there's also Strike Energy. It's a similar kind of story on this chart. And then I guess the big one is Santos. So Santos got the green light from the federal government for its $3.6 billion. I can't pronounce that, but I apologize for that. But they've got this large project in the works, and it looks to be going ahead. And that's also from the Australian Financial Review. So Santos, well, they've had a bit of a difficult year. A lot of sideways trading here, basically tracking what the ASX has done over the last, or at least the ASX 200 has done over the last few months. So what I would like to suggest now, though, is that there's sort of second order effects from all of this. So what do I mean by that? I mean consequences of consequences, which means that I actually think a lot of the long-term action from whatever energy policy we decide will eventually flow through to resources. So once again, I've talked a lot about the copper price. Here's a very large copper company. It's Aussie Minerals Limited. Very strong year there. And then here's a bit of a strange one. So this is actually Talga Group. They recently renamed from Talga Resources, and this is the long-term chart here, and it's actually punched through resistance here and gone on a huge run. So what do? They do sort of battery anodes, graphite, particularly graphite enhanced battery anodes for the European EV market. Now that all seems to make sense, but there's another chart that I want to show you, one last chart, which may be hinting that I'm onto something here, that there will be these second order effects from the world's energy choices, which is the steady rise of Lynas Corporation Limited. So this is a rare earths company. You may have heard of it. And rare earths are increasingly going to be used in wind turbines, electric vehicles, and of course there's the geopolitical element of China tensions as well, and the US shifting its supply chain. So this is really quite a strong run from Lynas here. But if you go back all the way to 2011, you can see how far off it is its 2011 peak. So Lynas is definitely an interesting one to watch if you think this energy theme flowing through into renewables is, I guess, the next wave or the next sort of logical step after we make our energy choices. So on that note, I'd encourage you to read the article in the link below. I'd also encourage you to check out Exponential Stock Investor, which is an excellent small cap newsletter, which I'm an analyst on. And it's a great read if you're interested in small caps. And beyond that, I'd also encourage you just to subscribe if you like this kind of content, and I'll bring you some more charts and headlines next week. So have a safe week and take care, and I'll speak to you soon. Thank you.